Hello traders, this is Rich from Tradesight. This is a look at the market leading stocks via our proprietary scans for the coming session. This is going to be for Tuesday, November 19th, 2013.
Hello traders, this is Rich from Tradesight.
What we're seeing today is mostly some pretty bearish action here. We're stacked up fairly well, as you can see, in the NASDAQ patch and also elsewhere in the different sectors.
We're trying higher prices,
NASDAQ patch is definitely biased to the sell side here, and we've got quite a few deviations.
We've
got downside here, VWAP deviations today in Baidu,
the
First Solar,
by 4 in the day, but
and also Sinus, so we're closing well below the VWAPs in those particular names. We've got open-close deviations in Sinus, Netflix, BlackBerry, and a couple of those are close, but not quite there yet. First Solar is getting close. Not too many volume deviations. We've got one volume deviation to the upside in EA, but for the most part, the pretty bearish action here today, as NASDAQ is relatively weak versus the broad market.
All right, so here's a look at the Dow futures.
Take a look at the financials. I want to introduce Huntington Bancorp HBAN to the list. That is replacing ICE. Huntington Bancorp actually has a very, very heavy weighting in the BKX index. Didn't have it in there before. It's just because it's kind of a low price stock. But I think kind of a hidden. It's nice to have a couple of low price stocks in there,
or just
camouflage as well. Especially when it's so heavily weighted in the index. So welcome to HBAN. Today the financials are definitely stacked up to the downside here. There's no buy indications right now, even with a little bit of time to go on the day. You can see that we've got a variety of different sells here, but we definitely focus on the ones with the CPS downside conditions.
We could fall back.
Do have some volume bumps. We've got one at Bank of America. And also
this trend pattern that would not be particularly bullish.
As far as the open and close of the VWAP deviations,
exiting this area after quite some time. I'd like to see a little more extension.
Again, the energy names mostly weak here,
but it's not a deal breaker.
Coal names are pretty weak. BTU's got an open close deviation. Arch ACI is also fairly weak.
All right, so next up,
and just like the rest of the other sectors, we are skewed to the downside here
in the energy names. A little different animal because we actually closed.
Moving on to the generals here, it's a little bit lighter.
It's not that hidden.
There's definitely relative strength in the overall broad market today. We're seeing that in the scans today. Do have a couple of signals here to keep an eye on, as well as a couple of volume bumps. We've got one in Best Buy and also one in John Deere.
So what we're doing right now is we're seeing potential for reversal.
Moving on to the housing names, a couple of downside signals, nothing on the buy side.
We're going to see a retest of this breakout here. So
nothing's really qualified for
going to need some kind of a positive catalyst,
a divergence just yet. But we do have Hobnanians more than 2% below the day's open. It's really dropped down very considerably below the VWAP, so we're going to be having a very, very weak close here. DHI, as well as lows, are also pretty weak today. Transport names fairly weak. Couple of signals here. We've got one in Norfolk and one in UPS.
We did have an outside day down. This
neither of those signals are on
much more decisive.
Decent volume.
So we do have a negative candle to work off of here.
And the commodity patch, a little bit of weakness here today. We've got a camouflage sell signal in potash. That was definitely a negative development. Newmont Mining is 2% below the day's open. Mosaic is almost 3% below the day's open. And ABX is considerably weak today, 2% below the day's open. So for the most part, pretty good weakness here in the ES commodity patch.
ES futures are 10 days up now.
So, well, on balance for the day, definitely leaning towards kind of sloppiness tomorrow. We'll have to see how it manifest, whether it's going to be a gap up or just an outright continuation.
So we're definitely on the door.
But either way, we're going to be not passing on any good shorts.
Nearby levels are going to be the 5-base level.
As always, thanks for listening. This has been Rich for Tradesight.
Yes, up above that, the high so far for this week, which is today's high, about 17.99. Then above that, 18.1250 to the upside. Also keep in mind that the 10 EMA, if we do get all the way down there, could definitely come into play. As another support level. And then the big support level, if we do really start to tumble to the downside, is going to be the 1750 area for sure. As far as the NQs go, NQs settle right at the 10 EMA. Surprise, right? The 8-ace level overhead, 34.3750, remains resistance, and that'll only be after we get up and above Monday's high of the day, which is also going to be an important level in between here and there at about 34.24. To the downside, obviously, where we use the 10 EMA is going to be important, and then below that, the 7-ace level at 33.59, and then below that is going to be the swing low right here at about 33.15 or so. Here's a look at the 10-day trend. We had a big pop in the trend today. The trend was up 1.25 or so. So we've got a high number going into the average there. But keep in mind we've got one that's below 0.6 as well. So that's kind of a Mexican standoff there. But we got very, very close, but didn't quite tag that 0.85 overbought threshold, and we haven't moved that far away from it yet. So if we do get another low reading or two in the trend, we could also have that recorded. And if we do record that, then we're going to be looking for multi-day decline in the overall market. So a little bit of a rotation into the bonds. So we're seeing the S&P TLT ratio chart take a hit here. Never really got up and into that nice area up here where it was. You can see it's actually starting to lose momentum as far as the risk on goes. And I think this is one of the few things that's really actually showing that the market's losing momentum more than just beyond price itself. So this is definitely something to watch. And if this does persist and start to roll to the downside, then we're going to have to start looking at the trend lines to the downside on this ratio. As far as the individual sectors go, there really wasn't any great showing. The XAU was even weak. Definitely the semiconductors and the BTKs were weak. The banks really started to roll over late in the day, but they're actually pretty strong earlier on. So for now, the banking industry was fairly strong. But let's move on and take a look at the individual sectors. All right, so here's a look at the individual sectors ranked from best to worst. Certainly the worst one on the day was the XAU by a decent amount, and then the oil services were also fairly weak as well, and the BTK was kind of right in there. So we have this cluster of the three horsemen here that were really pretty weak on the day. But while the oil services were and the energy names were fairly weak on the day, the transports weren't too bad. So definitely not losing more than just one. Really only lost one leg of the stool today. So that's not a big concern just yet, but definitely something that we want to keep on top of. The better performing stocks were loosely defensive. The consumer index was fairly strong. Telecom was all right, but the utilities were fairly strong as well. So it was not a disaster of a day as far as the different leaderships go. Wouldn't be surprised to see a little bit of a bounce in the XAU tomorrow. So definitely don't pass on any longs there tomorrow. Let's move on and take a quick look at a couple of charts. Okay, first up here, let's start with the best. Here's the BKX. The BKX went up and tested this previous high water mark intraday, only gets stuffed and rejected, and to close just a little bit lower on the day. So definitely tall tail on the chart here. Tall tail not only on the recent move. We've also got a reference point here to the left of the chart where we had resistance and failure before. So definitely seeing what's potentially a problem for the market going forward on this chart. We're only 7 days up. Be a little higher probability of a reversal if we were 8 or 9, but nonetheless very bearish bar on the day's chart. If we do continue to the downside, the 4/8 level is definitely going to be the one to watch, because that's going to be the convergence of the 10 EMA and that 4/8 level on the Murray Math box. To the upside, the day's high is going to be important. About 66.90, and then above that 67, about 20 or so is the 8/8 level, 6/8 level, and also the previous high water mark of the move. The semiconductors were pretty darn weak today, and still feeling the effects of this 13 exhaustion that's in place. Settled right at the 10 EMA. If we do roll to the downside, this 500 level will come into play, and then below that the 50 period moving average. To the upside, previous high water mark at about 510, and above that the risk level from the seeker exhaustion is going to come into play about 513 and a quarter. BTK index was real weak today. We have this king and queen here. It's not really at range high, which would give it a little more potency, but it's still a pretty distinct pattern nonetheless, where the previous day's buying was completely rejected in one session. To the downside, we're going to have a lot of support right here at the 50 and the 10 EMA, where they come together. If we release below that, then the next real big level is the 4/8 level, about 21.25. To the upside, the intraday high from Monday will be the level to watch, about 22.32 and a half. Oil services pretty weak today. We had this new high close on the move on Friday. Did not make good on it. Broke down sharply today, so we're back down into this little lateral range. If we do continue lower, the 4-ace level at 281 and a quarter is going to be in play, and then below that, the 50 DMA to the upside. The day's high, and then Friday's high will come into play at about 293 being our next real level, and that's also, of course, the breakout level to roll back to the upside a little more aggressively. So we'll take a moment here to take a look at the oil contracts. The oil futures dunked down here, and we're now 11 days down on the Seeker exhaustion watch. So we're potentially just a couple of days away from getting an exhaustion signal to pivot back to the upside. Certainly the one this little flat signal that we got back over the summer kind of ended the trend to the upside and rolled us to the downside. We'll see if we can get one here back to the upside here, and we're getting pretty close. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.